Canada's new ATM and banking rules in 2026 are already quietly reshaping the way millions of pensioners access, protect, and manage their money. And the overwhelming majority of seniors across this country have absolutely no idea what has changed, what they are now entitled to, or how much money they may already be losing every single month simply because nobody told them. This is not a minor technical update buried in government fine print. This is a sweeping shift in the financial rules that govern your bank account, your pension payments, your fees, and your rights as a Canadian retiree. And if you do not understand what is now in effect, you could be paying fees you are no longer legally required to pay, missing benefits your bank is obligated to provide, and leaving real money on the table every single month for the rest of your retirement. Before you walk up to another ATM, before you let another bank statement go unread, and before another penalty charge quietly disappears from your account without your knowledge, you need to watch every second of what follows, because the information in this video could genuinely save you hundreds of dollars this year alone. At Canada Pension News Bulletin, our entire focus is on breaking down real pension updates, banking changes, and financial warnings in plain language that actually matters to you. We do not cover politics, we do not chase headlines, and we do not talk down to our viewers. We exist solely for pensioners, retirees, and the family members who are trying to help protect the financial futures of the people they love. If that sounds like you or someone you care about, make sure you are subscribed right now so you never miss a critical update about your CPP, your OAS, or any other piece of your retirement income. Now let us get into exactly what has changed, why it matters, and what you need to do about it starting today. For decades, Canada's largest banks operated with what can only be described as a quiet but devastating penalty system that hit the most financially vulnerable Canadians the hardest. The system was built around something called a non-sufficient funds fee, commonly known as an NSF fee. If you have ever opened your banking app or your monthly statement and found an unexpected charge waiting for you simply because your account ran a few dollars short when a payment came due, you already understand exactly what this feels like. That sinking, helpless sensation of watching money disappear from a fixed income for something that felt completely beyond your control. Here is how it worked and how badly it hurt pensioners specifically. Canada's major banks, including Royal Bank of Canada, TD, Scotiabank, CIBC, and others, were charging between $45 and $48 every single time an NSF event occurred. Every single time. Now consider what that means in the real world for someone living on a CPP and OAS payment that arrives on a fixed date each month. Your pension arrives on the 27th, your hydro bill, your insurance payment, or your phone bill goes out on the 25th. The 2 days between those dates could trigger a $48 penalty, not because you did not have the money coming, not because you were irresponsible, but simply because the timing did not line up perfectly. That is $48 gone from a retirement income that does not grow, does not flex, and does not forgive you for the bank's own timing structure. And it got worse. In the past, if your account triggered an NSF situation in the morning and another payment attempted to clear that same afternoon, you could be hit with 2 separate fees in a single day. That is $90 or more vanishing before you had even had a chance to call your bank, visit a branch, or transfer funds from another account. For seniors on fixed incomes, that kind of double penalty was not just painful, it was genuinely destabilizing. It could mean choosing between groceries and a prescription. It could mean a cascade of late payments that took months to recover from. But here is the news that every pensioner in Canada needs to hear right now, and it is genuinely good news for once. Starting March 12th, 2026, the federal government officially placed a legal ceiling on NSF fees at just $10 for personal and joint bank accounts at all federally regulated financial institutions across Canada. This announcement was made by the Honourable François-Philippe Champagne, Minister of Finance and National Revenue, and it took effect immediately on that date. What was once a punishing $45 to $48 penalty is now legally capped at $10. That is not a rounding error. That is not a small adjustment buried in regulatory language. That is a reduction of as much as 80% in what a bank is permitted to charge you for a single missed or insufficient payment. The Financial Consumer Agency of Canada, known as the FCAC, is now the enforcement body responsible for ensuring that every bank in the country genuinely follows these new rules. They are not suggestions. They are not voluntary guidelines that banks can choose to honor when it is convenient. They are binding regulations with real oversight behind them. And the new protections extend even further than just the fee cap itself. The government also established a rule that banks cannot charge you more than one NSF fee within any 2 business day window for the same account. Think carefully about what that means. If your account triggers an NSF event on a Monday morning and another payment attempts to clear Monday afternoon, you can only be charged once during that window. That alone represents a fundamental shift in how banks can treat pensioners and everyday Canadians who are caught between the timing of income and the timing of expenses. And there is a third layer of protection that is just as important. If the amount your account is short by is less than $10, the bank is not permitted to charge you an NSF fee at all. If you're $9.50 short, you cannot legally be penalized with any fee. That shortfall is simply too small to justify a charge under the new rules. The Department of Finance has estimated that the $10 NSF cap alone will save Canadians approximately $619 million in the very first year of implementation. Over a 10-year period, the government projects this single change will return $4.1 billion to everyday Canadians. More than 1 in 3 Canadians, roughly 34% of the population, faces at least one NSF fee every single year. In 2023 alone, there were approximately 15.8 million NSF transactions recorded across the country. And when that data is broken down by age group, seniors and pensioners living on fixed monthly incomes are impacted at a disproportionately high rate compared to any other demographic. The new rules exist precisely because the government finally acknowledged this reality. Now, beyond the NSF changes, there's an equally important set of banking rights that most Canadian pensioners are completely unaware of, and this is where things become genuinely critical for your wallet right now. As of December 1st, 2025, a modernized banking commitment that was signed by 14 federally regulated financial institutions, including all 6 of Canada's largest banks, came into full effect. Under this commitment, all Canadians can now access bank accounts costing no more than $4 per month, with significantly more debit transactions included than were available under previous standard account tiers. But here's the piece that matters most specifically to you if you are a senior receiving the Guaranteed Income Supplement, or GIS. You are legally entitled to a completely free bank account, not a discounted account, not a plan with a partial fee rebate, a fully free $0 per month bank account. If you are currently paying any monthly banking fee whatsoever and you receive the GIS, you are paying for something the law says should cost you absolutely nothing. That money should still be in your account. The Guaranteed Income Supplement is a non-taxable monthly benefit added on top of your old age security payment. It exists specifically for lower-income seniors who need additional financial support. The government has made it a legal requirement that banks provide free accounts to GIS recipients, and yet countless seniors across Canada are still paying fees every month simply because their bank has not told them about this right and they have not known to ask. If you or someone you know receives the GIS and is paying a monthly banking fee, that situation needs to be corrected immediately. You do not need to wait for a meeting with a financial advisor. You do not need to file a formal complaint. You simply need to walk into your branch or call your bank's customer service line and tell them you received the GIS and want your account converted to a no-cost plan. Bring documentation of your GIS status if they request it. This is your right under Canada's Financial Consumer Protection Framework, and no bank representative has the legal authority to make that process difficult for you. Beyond GIS recipients, Canada's major banks have been expanding their senior-specific banking options, and 2026 has brought meaningful improvements to what is available. CIBC offers what is called the Smart for Seniors account, available to customers aged 65 and older, which provides up to 12 free monthly transactions with no monthly fee attached. TD Bank provides a monthly fee rebate for customers aged 60 and over on select account plans, and its premium all-inclusive banking plan includes free personalized checks, a complimentary small safety deposit box, and no fees at any ATM across Canada, with the monthly fee waived entirely for customers who maintain a minimum balance of $6,000. Scotiabank has its own senior discount structure beginning at age 60. RBC rounds out the major institutions with its own set of senior offerings, though the specific thresholds and benefits vary between banks. What is critically important to understand, and something that too many pensioners have discovered the hard way, is that your bank will almost never automatically apply your senior discount or move you to a senior account the moment you reach the qualifying age. You have to ask. In most cases, you need to take deliberate action yourself during the month you reach that threshold. Contact your bank in person at a branch or by telephone and explicitly request that your account be converted and your senior discount be applied. This is money sitting uncollected every single month from millions of Canadians who simply have not been told they need to ask for it. Now let us turn to ATM fees specifically, because this is where daily habits can quietly bleed a pensioner's budget in ways that are easy to overlook until you add it all up at the end of the year. Using your own bank's ATM, meaning a machine that belongs to your bank's network, is generally free and is counted within your standard monthly transaction allowance. The financial damage begins the moment you use a machine outside your bank's network. Most out-of-network ATMs in Canada charge between $2 and $5 per withdrawal. On top of that, your own bank will often charge you an additional fee, typically around $2, for using a machine that is not part of their network. If you are making even 2 or 3 of those withdrawals per week, you are looking at $30 to $50 in ATM fees alone every single month. Over the course of a year, that is $360 to $600 gone from a retirement income that has no room to absorb unnecessary costs. The single most effective thing you can do immediately is commit to using only your own bank's ATMs whenever possible. Every major bank in Canada has a branch and ATM locator built into their website and mobile app. If you are not comfortable using a mobile app, and many seniors reasonably prefer not to, simply call your branch directly and ask a representative to tell you where the nearest in-network machines are located in your neighborhood. They can answer that question in under 2 minutes, and it could save you hundreds of dollars this year. Zooming out to look at the broader financial picture for Canadian retirees in 2026, these banking changes do not exist in isolation. They are part of a much wider set of updates that are affecting your income, your taxes, and your overall financial position. Canada Pension Plan payments rose by 2% in January 2026. That is lower than the 2.6% increase in 2025 and the 4.4% increase in 2024, but it still represents a real increase, and it reflects the cooling of inflation as measured by Statistics Canada using price data from 2024 through October 2025. If your CPP payment did not increase in January and you are uncertain why, contact Service Canada through the My Service Canada account portal or by calling their helpline directly, because the increase should have been applied automatically to your file. Old age security payments are indexed to inflation on a quarterly basis, and the January to March 2026 quarter saw a 0.3% increase, reflecting roughly a 2% rise over the past full year. One of the most important features of OAS for pensioners to understand is that these payments do not decrease if inflation falls. They can only hold steady or increase. If you chose to defer your OAS beyond age 65, your payments are even higher, with each month of deferral adding 0.6% to your benefit, up to a maximum 36% increase for those who waited until age 70. That is a substantial permanent increase to your monthly income that pays dividends for the rest of your life. If this information helped you today, please take 30 seconds to share it with a family member, a neighbor, or a friend who is living on a pension and needs to hear exactly what we covered. And if you are not yet subscribed to Canada Pension News Bulletin, do that right now. This channel exists for one reason only, to make sure you are never the last to know about something that affects your retirement income. We will see you in the next one.